Hey, what's going on, everybody? It's your boy Stock Talks. I appreciate you guys tuning into my channel. Listen, I've been MIA for quite some time because I've been really focused. I've been really grinding. I've been really just focusing on my process in terms of investing, okay? So a lot of us listen to a lot of YouTubers out there, and you know, we kind of feed off their energy. We kind of feed off, you know, what those people are investing in, and we try to capitalize at the same time as apes on certain stocks, right? So we all have something in common, and that's the companies that we're investing in. Our interests may be somewhat the same, our interests may be different, we have our different point of views, things of that nature, but then some of us, or most of us, feed off YouTube. I must say, man, you guys got to really just be wise. Okay, so again, first and foremost, let me just give you my apologies. You know what I mean? Why I went MIA. Again, I was grinding. I was focusing. You know, my portfolio dipped about 50%. Messing around, listening to all these YouTubers, man. You know, some information that they relay is great. Some information that they relay is just, excuse my language, but just a bunch of bullshit. Okay, you have some of these YouTubers, you know, telling you to pick up 100 shares, 125 shares, you know, buying massive shares. No, I've realized that that is very risky. That will cause you holding the bag. So I've done that, right? So I've took advice from a lot of YouTubers, or several YouTubers. I'm not going to mention no names, but I feel like they caused me holding the bag. So now that I'm finally out the hole, I kid you not, I was 50% down within my portfolio. Now that I'm out of the hole, and I've really just kind of shut down YouTube and really just did my own research in terms of you know, better ways and better processes to investing, right? So this is fundamental investing. So again, I'm not going to discuss tonight, you know, particular stocks. I just want to engage my viewers and engage, you know, YouTube in terms of you know, what I've done. I want to share to you guys what I've done to get my portfolio back up to, you know, where I pretty much started when I've invested, right? So I'm back at 100% plus. Okay, so I'm out of the hole. I'm still holding the bag on several stocks or several companies. I'm working on that still, but I'm out of the hole. That is key. And I'm sure a lot of you guys are probably still holding the bag, but you know what? Do not sell. Do not panic sell. A lot of us panic sell. A lot of us lose money by panic selling. So my advice is, do not panic sell unless it's an emergency. If it's an emergency, you need your money for family crisis, you know, you need to pay bills, etc., then I completely get it, especially with all the hard times, you know, with COVID-19, things of that nature. But really do not sell. Do not panic sell. What you can do is continue to grind, continue to get your hustle on, and continue to pump money into your investment. Again, you're not investing if you are not pumping money into your investment. You are not investing if you are not selling and taking profits and flipping your gains. Fundamental investing, man. A lot of these YouTubers will tell you, you know, pick up, you know, 100 shares, you know, on the initial drop. I find that chaotic. I've done that, man, and I found myself holding the bag. So what I've realized was, you know, you really have to pay attention to the analytics. You really have to pay attention, you know, to the charts, to the graph, because they all make sense and they all tell you something, right? So right in front of us is AvePoint, AVPT. I'm going to discuss that in another video, but I just wanted to have it on the screen for all you, you know, for all of you beginners out there. You know, I mean, this is what the graph looks like. This is what the analytics look like. Okay, so So that's major key. Do not panic sell. Another major key is increase your shares exponentially. So if you are uncertain about a particular stock that you want to get into, to be honest, this is what I've been doing. I pick up one share. You feel me? I pick up one share and I monitor them for about a week, maybe even several weeks. Okay, so time is money. Time, money is patience. You got to be patient. So this is what I do. I buy one share. I monitor, you know, the volatility. I monitor the price target, the price action, the up and downs. You know, when you find that stock consolidating, when you find them consolidating, you know, from 40 to 43, 43 to 42, back down to 40, 40 to 41, back up to 43, that should give you the warm and fuzzy that it's consolidating right there. Now again, you have a 50-50 shot. Okay, there's a 50-50 shot that it may rally up from that consolidation point, or you have a 50-50 shot that a large hedge funder may sell off and cause the price to dip. But keep in mind, when it dips, that is the best time or the great opportunity to buy more shares. So when you buy the one share, let's say for an example, you bought it for $17 a share, and you realize the consolidation, right? 15 to 17, 17 to 15, 15 to 17. If you see your company that you're investing in, if that price action comes down from 17 to 15, what does that tell you? Buy one more share, maybe buy two more shares. Go with your gut, go with your instinct. Maybe you pick up 5 shares at 15. So now your one share that you've been monitoring for quite some time at $17, now you've cost average down substantially, right? So 17, you picked up 5 shares. So your first share was at 17. Now you pick up, you know, 4 more shares, 5 more shares at 15. Now your cost basis comes down. You let that ride up. That's what I do. I let my stock ride up. Now I have about 5-6 shares, right? Cost base is about 15. Let it ride up. The price or your price will ride up. Now you have a decision to make, whether you shed your shares off or you wait till the price come back down to your price target. Okay, so if you see, so now you have 6 shares. So if you see your price or your cost basis or that stock comes back down to your price target, you can make the decision to buy more shares or not. If it goes below your price or your cost basis, you can even pick up more shares, right? So that's how you control the dip. And you also have the choice to just let it rally up and then take your, you know, 15, 20, 30%, whatever percentage makes you, you know, whatever percentage you're comfortable with. So what I've been doing was exactly that. So if I increase my shares to 10, I then decide, you know, I take profits, right? So I would shed them off maybe 5. I would shed off maybe 5 shares, or maybe I shed them back down, keep 1 share, and I'll take that money and the proceeds and reinvest it into some other company that's dip, you know, 20%, 25% dip. You rotate out of it, okay? Then you take that money and your proceeds. For example, if it was AVPT, you rotate out of that and maybe go into like Lucid or something, right? So you monitor AvePoint at that point, and then you monitor Lucid. So you do the same thing. You just kind of flip back and forth. Now that's for swing traders. If you're a long-term hodler, you have nothing to worry about. Just hold the stock or hold the company, and just keep buying more on the dip. Okay, that's hodlers. But if you want to just flip money, that's exactly what I've been doing. And by me doing that, allowed me to get out of the hole. So again, dropping 100 shares on the initial drop for a stock because you're hungry, or because you heard, you know, another YouTuber tell you, you know, buy 100, 125, 200 shares. That's a huge risk. You have a chance of holding the bag big time. But if you exponentially grow your share count, if you did hold the bag, it would just be minimal. Okay, so I hope that made sense. You know, if that made sense to you guys, man, please hit like. You know, please love my channel, share my channel, show me some love, because I'm just being transparent as I could be. And again, I've learned from a lot of people, you know, in terms of incorrect versus the correct way, the fundamental way to invest. And I've learned that on my own. So again, my deepest apologies for going MIA, but just wanted to share you guys that knowledge, right? So if you don't understand, you know, leave me a comment, and you know, maybe I'll shoot another video and explain it more thoroughly, okay?